What's up, guys? This is Franz again. Love coming to you on weeks where actually something is going on. That's why it has been a while after we exited our indice long positions in January. We were kind of sitting around waiting. Now it's the end of March, and markets could get going, at least could be figuring out where they are going next or if they want to do anything next. What we have right here is the S&P weekly chart. If you take a look, we got stopped out on this bar right there. Stop was below those two guys right there, here below the low of this one at around 2660. I don't even remember that well at that point. We took profits from all of this uptrend, which is exactly what we want to do. Market is trending, that's where we make our money, and when the market stops trending, we get out. And how do we know when to get out? We'll always get out when the market enters the balance zone. It did that here, and it proved to be correct to exit this trend. This week is a very, very heavy down week. S&P is losing quite a bit of its value here. As you can see, this is a huge red candle. When you take a look at daily chart, you can see we broke through this fractal down here, and we're now approaching old lows. If you want to go even lower than that, 4 hours, you can see the candles that we see do have quite a bit of momentum in it. There's quite a bit of speed to take the price lower. I really enjoy seeing this, I gotta say. It's always, well, you know, not because of the economy, obviously not, but as a trader, purely focusing on this as a trader or as an investor, I like to see markets proving that they stopped me out. You know, when you are out of the market, you don't want to see it continue up. And after reaching kind of these highs here, where I'm marking it right now, we're now dropping down. We are below the balance zone, and it's now 12 minutes before the market closes, and what we see is the market closing below the balance zone, below that blue line, and that is quite a bearish sign for me. I'm expecting the market to come even lower. We are going to breach the lows at 25.50, 25.30. We might even go lower than that. Who knows where we're going to end up as this goes lower. It might turn right on these lows that we saw here at the beginning of February. It might even go lower than that. I don't know. If we want to take a look further at this market and want to know what's going on overall, we can state definitely that on our trading time frame, the weekly chart, we are out. We're stopped out, and we have no business being in this market right now, because the market on the monthly chart, which we're looking at right now, is above the balance zone. So when the market is above this balance zone here, we want to find entries after a correction like this, and we want to take the market into the direction where it's trading on the overall time frame, and that would be long for the S&P still right now. So these last 2 months that we saw here are more bearish, but as you can see on the monthly, they're not really anything more than a correction after you get all of these months here, a year and a half, moving to the upside. So we'll really have to see how far down the market wants to come. Again, our help or our simple indications, which are the indicators, are going to show us where possible places are where the market could turn. And these are, of course, the green, red, and the blue line, or any area in between. We don't really care, because this market is not for us to trade right now. We took our profits from these longs, and now the market is finding itself. We are absolutely not taking this market short, because the overall time frame is still above the balance zone. It might spike down and then come up and continue this bull trend. We don't know. And there will not be any chance in this state of the overall trend, that means the monthly chart, for us to take any profit here or to take any position short, expecting the market to go any place. As we are trend traders, where's the market going to go when the overall trend is non-existent? Which means if the market comes down here, we are short against the overall trend, and that's absolutely not what we want. Anything can happen in here. It can spike down really far, and it might look like we really missed something by not taking the position. But remember, we're not day traders. We're not trying to take money from morning to evening here. What we want to do is stay with this stuff for months, and before the market can really give us a trend to the downside, and now we're really projecting into the future, what you would have is a fractal inside the balance zone that is breaking to the downside. So when you take a look at fractals like this here, they are broken to the upside when they are above the balance zone. This is what we would need right now for the market to really sell, to really have a bear market going on. We would have to need that. And we are very far away from that. So in the S&P, we don't even look at a bear market. All we recognize is this market is going sideways. This market is down a lot this week, but on the actual time frame that will show us where the longer term trend is going, which we're interested in, you can see that this market is still up. It might end this uptrend right now, right here, because the next month is going to go and close all the way down here at 2200 or something. Who knows? I don't know. This is just an example. But until the market corrects and until the fractal to the downside is broken, nothing will happen for us to sell this. Also, momentum at its peak, so no divergence, no nothing. Not really any indication for this to sell. However, the uptrend on our trading time frame is still over. The only thing that this scenario is telling us right now here is, should the market start to fail here, should it continue to the upside, we would take the next fractal to the upside and buy this again. That's the situation in the S&P. We have other American indices that do exactly the same thing. What is different is what we see in Europe. European indices have been bearish for quite a while on the overall time frame, where we see the S&P still heading out and staying above the moving averages. We see the stocks, the Euro Stocks 50, for example, already trading at the lower end of the balance zone, and it doesn't take that much for this thing to drop down much further. As you can see, this is the overall situation in the Euro Stocks. And while American indices, ever since these lows here, that is 2009 and then 2011, ever since those lows, American indices really have established uptrends. They really moved into bull markets. They exceeded previous highs. They made new all-time highs. European indices, except for the DAX, didn't really accomplish that. And when we focus here on the stocks, what we see is we never even been close to the old high at around 4,600. We only managed to come up to 3,850. Now we're trading at 3,300 right here. We tried to come above the balance zone. We tried to hit fractals. We did hit them, but we failed. We come back to the place where the market wants to be if there is nothing new coming in, really moving the market anyway. So that would mean extremely bullish or extremely bearish news. We don't have that. So we are taking positions wherever the market is taking us. We tried to buy it as the market was above these moving averages, but it proved pretty fast that it doesn't want to go there. On our trading time frame, that would mean we are taking the market long from down here, and it corrects. We're taking the market long again, and it corrects. So we're not really making any money. We made some money in this, but we made no money in this. Now all of a sudden the market is selling. We have these three tops right here. The market isn't able to climb further on the higher time frame, that is the monthly chart. And on this time frame, no overall uptrend can be established. With 3 times a failure right in the same area here, we are now selling short. This week triggered a no, it's actually 3 weeks ago. 3 weeks ago, this self-fractal was triggered right here, and this market is closing in 12 minutes right below it. Which means this market for me now is a very early short. Since we are still inside the balance zone on the overall time frame, we really have to wait for this to establish itself and to keep on moving lower. Shorts are always very volatile. Shorts are always very different from long positions. While you just sit there and wait for long positions to unfold, shorts are quick, shorts are fast, shorts are rapid, and they can go against you really quickly. So what I do in such cases is I take this short definitely, but I have a very minimal risk. My stop is right on top of here, and I'm just waiting and see if it works. Also in shorts, we have to take a look not at Or usually what I do is I'm not really waiting for the fractal inside the balance zone to be taken. I'm acting on stuff like this, huge divergent bars or huge hammers or pin bars or whatever, as the market is coming down and moving away from our balance zone quickly. So that means, where is the balance zone able to go while the price is moving down so quickly? And where is the price going? As the bigger the angle between the moving averages and the actual price or the median price, the worse it is for holding the position long term. And when I'm shorting something, at least these indices here, it might be different in individual stocks or currencies, but when I short stuff like this here, I want to be in and out pretty quickly, even on the weekly chart. I'm not waiting for a massive trend to the downside to establish, as long as, and this is really important now, as long as the monthly chart, our overall trend, has formed a fractal inside the balance zone to break out to the downside and really is then able to move further to the downside. When you take a look at 2008 crash here, that's exactly what happened. We had this uptrend, market comes down. It gives you this situation here in which we are right now. We have a price inside the balance zone here. We have a price inside the balance zone there. This is a very early short we're taking. The market comes lower, creates this fractal, corrects this one, and then as it is broken, this is when the downtrend on the weekly and on the monthly as well is really being established, and this is when you can stay in for longer term, where you don't take these divergent bars to exit the market again. Right now we have a very early short going on in this market. All right, this is the indices situation difference between Europe and the US. The same exact thing is true for the UK index, for the FTSE 100. Just so you are aware, because some people have been asking me about it, look at what's going on. I told you that we were long in all of this. It sucked. It was not good. We had other indices where this was much more profitable. We were stopped out here even with losses, especially here in the end. We took it long again from this fractal. The market came down heavy and we got stopped out. In the worst case, you got stopped out only below here. So that's a maximum loss right there. No real profits in this either, because divergence was unfolding and markets don't have any momentum as they establish divergences, and therefore there's not really a lot of money to be made. And now what happens is you have this drop, the market creates your fractal, and look at where we're at in the UK 100. We are dropping down quite a bit, and it doesn't look good for that thing, really. Same situation as the Euro stocks, in fact. Okay, looking at some currencies, what do we have? British pound, Australian, we have been long for quite a while. As you can see, we're moving through this pretty quickly because we don't actually really care what's going on. We're just following the market and we're trading money. We're trading risk. We know how much we lose in which positions, and we're not excited, or we're not... well, we are excited and we are sad, you know that. I guess I'm kind of an emotional guy in that way. But what I want to do is I want to have a set of markets. I want to go through it and I want to be able to just take my positions and don't care if they work or don't work. I'm excited if something gets going, and I'm excited if a scenario is unfolding that I anticipated or that I have a position in. But since we're always going with the market, usually we are going to end up with something, and there are times when the market's not really going anywhere and where it's boring and stuff like that. But overall, we always have 3, 4 things that are going. Sometimes we have up to 20 positions. We did have that all throughout 2017. We don't have it anymore right now, but maybe some stuff is getting going. And British pound Australian is one of those things that all of a sudden got going, We went long as this candle unfolded and broke this fractal here. Then 6 weeks of nothing followed, and all of a sudden we're moving out. When we take a look at the monthly, we can see that we are breaking the balance zone to the upside. We have a fractal inside the balance zone. We have a new low here, didn't go low over here, and now we're breaking out to the upside. So we stay long as the overall trend is long, and so is our trading time frame entry. And this is really the key here. New Zealand dollar yen. We are short on this one. We simply sold the breakout from the sideways movement, and who knows where this is going to go. We just wait and see what's going to happen as the monthly is also breaking out. Who knows? Also very interesting, US dollar yen. We are short in this one, I've been telling you. Let's look at the overall time frame first. You have your fractal buy. We failed a lot of times in here. We lost and lost and lost. And now it seems like our downside fractal break is going to help us and catch the next move. We have our first sell entry here. We have the second one somewhere in this area, and the market is lower this at the end of this week, which is great for our short positions, for our two short positions actually. Stop is right below the first one to secure that, and the rest we just let run. Expecting at least levels of 100 to come in here, but probably lower. Who knows? We'll just let it run. This is our job as the trend follower. US dollar Canadian is also a position that we have. This one went against us this week. We are long from where the black line is, and the market went higher. It probably needs some correction after moving up this high for so many weeks in a row. We don't really have any opinion on this. We just take the price into the direction that it wants to go. Since the monthly is just about breaking out of the balance zone here with a fractal that has already been formed. Again, we have a higher low here than over here, and we want to take the market long at that point. If it works or not, we don't care. We just take the position. If the market is higher soon, we are very happy. Otherwise, our stop will take care of us. For the last part this week, we're taking a look at gold and silver. Again, these guys are so annoying, but our initial move across the balance zone on the overall time frame already happened. We have a correction just like in the two markets we've discussed before. The low here is higher than the absolute low here. We're simply waiting for this guy to break out of all of this. How annoying is that? I mean, look, this is April 2016 where this high has been made, and it feels like I'm looking at a 5-minute chart that is giving me a lot of noise, and I don't know when this noise is ending, so I'm taking the outer breakout fractal to buy this, but still the market isn't breaking out. We're staying below 1390, we're staying below 1370, and nothing is really happening. When will this finally break out to the upside? You know, nobody knows. I'm pretty sure it will happen. Who knows when? Who knows when? Same is true for silver. Silver's even looking worse than that. We're not even close to that previous high that was made here in 2016-21. We're trading at 1650. So I don't know. We just have to wait and see with the metals. Anyway, as you can see, a lot of interesting stuff happening in indices. It's always fun to be in a short position in indices, even though they are quick and they are fast and we have a minimal risk going. It's still fun to be in that. And some currencies seem to establish a new trend. Maybe we got some money-making opportunities here in 2018. It was a disappointing start after we had to take all the profits. You know, how ridiculous to say is that? But still, you take all the profits, you're used to seeing the money, you're used to having that emotion of making money. All of a sudden, the position is ending, the trend is ending. You have nothing. Your account is on zero, and you have to control those emotions, not to open up positions in stuff that doesn't get going, or open up positions too big, or anything like that. So, let's see what this brings. Next time anything interesting is happening, you'll hear from me again. Please post a comment and like the video. That really is enjoyable for me and helps a lot. Have a good weekend, and I talk to you soon.